Aloha, everyone. Welcome to Java. This is Thursday, October 19th, 2023. First, thank you all kindly for your support and for joining me this morning. I do appreciate that tremendously. If you don't mind hitting the like, it does help quite a bit. And I've been getting some really interesting news from some of you viewers, and I want to thank you for that because it's coming from all over. And I think these are the times we really, really need to stick together and understand that we are all here and not alone. Basically, they're trying to divide us, make us think this way. So I appreciate you being here. So on with the markets, we are looking at our MMRI is our favored risk indicator. It is above 328, just hitting crazy territories here. I left the full graph this morning so that we could see the progression from staying under the 300 level and then progressing up in a very rapid fashion. So this is following two of the main components are the dollar strength indicator and the United States 10-year yield. So really what we are watching right now and everyone else is the 10-year yield. It's approaching the 5%. So basically it's a very strong level. So if we break through that 5% on the 10-year yield, it will continue higher in probably a rapid fashion. Otherwise, what we can look at here will be it's hitting resistance. And if it pulls back as well as the dollar, that's positive for stocks. So I didn't even bother posting stocks because right now, as it says, the sentiment is negative or cautious. We watch stocks pull back and they're kind of going into the red the last day or so, as we kind of expected. However, they're waiting for Jerome Powell to speak today, and so that will move markets. I've got today's mortgage rates, the 30-year fixed over 8%, and the 15-year at 7.29. So mortgage rates hitting higher highs, the US 10-year hitting higher highs. Those are not good for the overall economy. So let's keep going. On the calendar, we've got initial jobless claims and existing home sales at 10. The jobless claims will come out prior to the market open. So I expect volatility on market open and then also more movement at 10 a.m. when those home sales come out. Then we're also listening to Powell at noon, and that's Eastern Daylight Time. So he will take the stage, and we expect markets to have a reaction. We don't know which direction they'll go. They normally overreact, so we'll see. So under our earnings, we've got this guy saying that long-term investors should be putting 80% of portfolios into stocks and other hard assets. So what they never mention is the important part is it's always your buy-in price and what you plan on doing with it for the long term. So if you purchase stocks, I recommend dividend strong companies that will weather this economic storm we are about to face. As far as hard assets, I like physical gold and silver that you can stack, and real estate if it's purchased properly, but that has a lot of headwinds. We'll go over that later. So we've got more Wells Fargo and Bank of America branches to close in the next few days. This happened very rapidly. They're putting the face on this that more customers are doing electronic transfers, electronic banking, and so they don't need these branch banks. But in reality, they're about to lose their shorts because they plowed a lot of their money into these safety bets of bonds, and they got these bonds at much lower rates when they were lower, and they're having to lend out now at the higher rates, and they've got tremendous unrealized losses on their books. So let's start with our stories today. We've got mortgage demand, of course, falling to the lowest level because we're at that 8%, and this is going to mean a lot of pain for the housing industry, which always trickles down to construction, jobs, materials, supplies, and then all of those stores that create the supplies. We saw this in 2008, and we're about to hit that again. However, I think this time it's going to be much more significant. It will be exponential, what it was last time. And then on the other side, we've got China. Their home prices are falling also. So this is a global economic event that we are looking with our debt implosion. And that's why I want to point that out. So in the retail and trade area, we've got the US government who put out all of those loans for the pandemic. And they're saying they have $62 billion in past due loans, just in the past due portions. And they're saying basically they're going to stop trying to recover that because going after the money for payback is going to cost more than just writing off the debt. So forget about the moral hazard that this causes or what they did with this spending in the first place. They're going to need your tax dollars later, and they will pursue you for this. So we've got another story. This is from Sky News, but it's regarding Nokia. They're going to cut 14,000 jobs because they've had a slump in sales. So this is not just one company of Nokia. It's an indicator for the space again and jobs in general. So moving on to oil and energy, there's quite a bit going on here. So we've got the United States announced $3.5 billion for projects nationwide to strengthen the electric grid and bolster the resilience. However, what they're kind of failing to mention here is they want to make this smart power. So they're migrating. And this is the quote unquote resilience portion of it, is that they're tying these into the artificial intelligence, basically, that will be shutting power when needed, when there are surges in power. They will be cutting down or doing what they call brownouts, timeouts. So they're going to be controlling this more. So even more reason to get independent, if at all possible. So in a story from the across the ocean, basically, we had Car Power Ship. This is basically Chinese power plant, cutting power supply to West African nations because they owe them $17 million. So because of this back price, their capitals now have no more power. So just something to keep in mind. We've also got oil pulling back, as we were talking about yesterday with these sanctions. This is all because the US needs to bolster their reserves and looking for alternate suppliers. So they dropped these sanctions. The price of oil came back for a short period of time. However, look for this to increase again. It will continue to inflate very shortly here. This war and everything that is surrounding it is highly inflationary for oil. And the other news, we've got Biden that wants $60 billion for Kiev. Still, they've already lost the war. It's basically just time to clean up and still pouring money into it. So notice $3.5 billion for electric projects and $60 billion for the short man in Kiev. So with our war and trade war, the key here is alliances, the alliances that are building. So at the same time, we've got the UK Prime Minister meeting with Benjamin Netanyahu from Israel. We have Russia with Lavrov meeting North Korea, Kim Jong-un. So we're watching these kind of polarity issues happening. It's basically, as my friend pointed out, just like World War II, the Axis versus the Allies. We've got China's making more deals also, and they are making deals with Kenya at the moment. So we're going to watch how this world thing plays out. We've had this, of course, is going to be a global war. We've got a brigadier general speaking about Iran being behind all of this in their point of view. I'm going to keep mine to myself and saying that they trained the forces of Hamas. And they really do want this war to spread. Multiple countries want this to spread. They've got different interests. So a couple of crypto updates because there's a lot going on in this space as well. And I think it's being kept very quiet. So we've got Stan Chart is discussing the choice of Dubai as the regulatory jurisdiction to launch their crypto services. So using Dubai as a intermediary, basically, I think that's key in the regulation and how this crypto space moves forward. We've also got Finland working on their instant payment system and embracing the digital euro. So And I find it interesting they're talking about the digital euro and not the unicoin, which we know is coming. So we've also got the UAE. The Emirate is launching a new free zone for digital assets, including Web3 and artificial intelligence. And so they're going to be very friendly to this space, and it's going to garner and attract many, many businesses in this space. We've also got a short story on Bitcoin holding is hitting new records. So more than 50% now are long-term holders of Bitcoin. So, but the government doesn't want you to hold it. And as we were speaking of yesterday, they do hold billions of dollars worth of cryptocurrency. So now for a couple of other lava updates. We've got the EU preparing Global Gateway Forum to boost global infrastructure plan. So what this is in essence is the EU version of the Belt and Road Initiative, which is coming along through China. And it's kind of, they're competing with China in strategic regions. So again, this whole alliance is thing to where they can create loans. They're going to then usurp it afterwards. And I think what's more important is the areas they're looking at doing this. Bangladesh, Senegal, Namibia, and Moldova. So those are just the start target areas, and we should watch that as well. So we've also got the side story of the IMF reaching the agreement that would allow them to receive the second payment of funds under a $4.7 billion loan package. So IMF is broke, just like the United States, but we're looking at doing all of these things for other countries, money for other countries, because again, the whole point is to inflate further. So before this gets much longer, if you don't mind hitting the like on your way out, I wish you all a green trading day, just a wonderful day in general. And until I see you again, my friends, stay free.